Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. As is usual at this time of year, I have forgone the usual daily charts and instead I have concentrated on giving a longer term view using weekly, monthly, even yearly charts, but rarely using daily charts. Now, if you would like to discuss any of these charts, I'd only be too happy to take your call. So without any further delay, let me introduce today's longer term chart. Today I'll be looking long term at US dollar versus the Mexican peso. Now, compared to last year, 2021 has been a bit boring here. No. Let me rephrase that. 2021 has been utterly boring compared to the excitement we had in 2020. I'm not just talking about the big ranges we saw in 2020. Let me remind you of what I meant. This is a direct quote from my annual review of US dollar Mexican peso written at the end of 2020, on the very last day of 2020, on the 31st of December 2020, with only hours to go before we close the market for the year. And I quote, "Finally, and perhaps most importantly, we have had a huge range throughout 2020. This led to the possibility of an annual key reversal or an outside year. The problem is that with only hours to go before the end of 2020, we are still too close to call it either way. If we close 2020 above 1964.03, then we'd have an annual key reversal up, though not a pretty looking one, looking like an annual bear spike as well. If we close between 1964.03 and 1892.5, then we'd have an outside year. If we close below 1892.5, then we'd have an annual key reversal down. With only hours to go, it's still too close to call it an annual key reversal up or an outside year. With two moving averages flatlining, one moving average rising, and one moving average rising but looking to flatline, on top of all the other things detailed above, it's hard to be clear." End of quote. At the time, it was like watching, for those who remember it, the Liverpool versus Arsenal football match in 1989, when at the end of a long season, the final match, indeed the final minutes of the final match, decided what it was going to be. In the end, it was only on the 1st of January 2021 that I could look and see for a certainty that 2020 had turned out to be an annual key reversal up. A rare beast of a pattern, but still a legitimate one. This year we have seen the market slowly taking on the follow-on to such a momentous pattern. We have gradually started to move higher throughout the year, forming a basing action of sorts, supported chiefly by the ever so slowly rising and occasionally flatlining 5-year moving average, currently at 1989.22, and moving up to test the first real big overhead resistance apart from the other moving averages, and that is the 50% Fibonacci line of the 2017 to 2020 move at 2158.76. The first attempt was in March and was quickly rebuffed, as it was seemingly too soon. The next attempt was last month in November, a more considered attempt higher, but that was also slapped back down in December, with what looks like a possible bearish double. However, and it is an important however, the market has not followed on down with a lower low to November, at least not yet. It seems we have now some additional support helping the market right now, and looking back throughout 2021 as well, it is the extension of the uptrend trend line currently at 2031.78 of the old 2017 to 2020 sideways triangle. This trend line has been pierced and closed beneath before, but it seems it is the 5-year moving average that has really done the heavy lifting here on a closing basis. This broken trend line is now just adding further support to that. You would need to see consecutive closes, I'd say 3 consecutive months closes, below this 5-year moving average. to move the market away from a bullish stance towards a neutral stance. And you would need to really break the 50% Fibonacci line of the big 2013-2020 move at 1882.80 to even look at this market possibly turning bearish. Right now, 2021 has been a market taking a breather, taking its breath, if you will, after the gyrations of 2020. Soon, it may be time for the market to start again in earnest, having ambitions on the upside. And that could well be when we see consecutive closes over the 50% Fibonacci line at 21.58.76.